I'm Emily Chang, and this is Bloomberg Technology. Coming up, tech mobilizes against hate with new game plans in the wake of the Charlottesville tragedy. How companies plan to draw a harder line without compromising core values. Plus, Cloudflare hits reset on its commitment to free speech, shutting down its relationship with the neo-Nazi site The Daily Stormer. CEO Matthew Prince joins us with why the time was now to make a stand. And Alibaba's massive growth fueled by the cloud. We'll discuss the tech giant's grip on online shopping and the monster first quarter that beat across the board. But first to our lead. It has been a chaotic couple of days following the tragic attack in Charlottesville, Virginia, and tech companies are coming together, committed to fight off those who promote hate speech, they say. It's been an ongoing battle for social media sites like Facebook and Twitter, but newer startups like Uber and Airbnb are facing a new challenge, mostly because users don't tend to share their views on those accounts. For more on this story, I want to bring in our Bloomberg tech reporter, Sarah Fryer, who covers Facebook and other companies. I want to start with Facebook and Twitter. Obviously, this is something that they've been struggling with for a very long time. The rules have been vague. They're still vague, but what are they doing now that's new?
Well, these companies have for the longest time tried to say, like, listen, we are a platform for people to share their views openly. We may disagree with them, but we'll only really delete them from our platform if they are violent in nature, if they're inciting hate or any sort of thing that makes their other users feel uncomfortable. Now, that hasn't always been the practice for a lot of these accounts. A lot of the white supremacist activity has in fact gone untouched, just because people haven't flagged it as much, or there haven't been events like this in Charlottesville which really highlight the risk here. And now these companies are being a little bit more proactive. So we saw Facebook take down 8 groups that were related to neo-Nazis and the alt-right that they thought were propagating hate. Airbnb, as you mentioned, they're also being very proactive. They deleted some people's reservations because they cross-referenced their usernames with what they were saying on social media sites.
Now, let's start with the content sites like Facebook. And, some of these white supremacy groups have been using Facebook to organize events. Obviously, they've been using Facebook for the purpose of coming together. I spoke with Keith Raboy, partner at Cloudflare Ventures, about whether content companies should be getting into the business of policing content, even if it is Nazi content. Take a listen to what he had to say.
There's some constraints about the content, particularly inciting violence. But absent that, I think it's a very difficult place to be. I don't think most technology companies can really censor content, both legally or prudently.
So you don't think they should? You don't think they should, even if it's Nazi content?
I don't think content should be censored.
So even if it's Nazi content, he's saying these companies shouldn't censor it. Look, where will Facebook and Twitter draw the line?
Well, the line isn't very clear. Right now, it's a little bit subjective, and that's one of the problems with these policies, is they all happen behind closed doors. And while Facebook will say that it's always had a very consistent policy against this kind of hateful behavior, those policies tend to be enforced when users report them. And we were talking about Facebook groups earlier. Groups are these places that sort of hide outside of the content moderation on Facebook because it's like-minded people talking to each other. It's a place where these kinds of stories can go viral, the memes related to the alt-right, they can go viral there, and then people might not report each other and to the content moderators to take it down.
So let's talk about what Uber and Airbnb are doing, because how do you tell if a guest is a racist or a passenger is a racist? Uber has told its drivers they don't have to pick up racists. We've
learned that Airbnb actually cross-reference the user accounts with what people were saying outside on social media. So that's a very unconventional approach that they took, where people were not actually espousing these views on Airbnb, the site, but in fact off the site, and then Airbnb took that into account, probably for the safety of the people who were holding these people in their homes.
Now, we have also been talking about PayPal cutting off relationships when it comes to payments on their site. Apple cracking down with Apple Pay. Tim Cook did send an email to employees yesterday saying, "I disagree with the president and others who believe that there is a moral equivalent between white supremacists and Nazis and those who oppose them by standing up for human rights. Equating the two runs counter to our ideals as Americans." Where does it stop?
I think a lot of the tech executives right now are having to come out and say things like what Tim Cook is saying. We saw a statement from Mark Zuckerberg yesterday. We even saw the Cloudflare CEO, who's coming on next, talk about the fact that it's very difficult now when you have these ideas being propagated on your platform. You do sort of have to think, okay, well, where do we fit into this? Are we a tool that's helping this grow? And I think a lot of the executives are grappling with it, and it's a subjective problem right now. But a lot of the free speech advocates I was talking to say, when you have such a small set of companies and leaders deciding what should be on the web, there should be a little bit more transparency down the line for exactly how these decisions get made.
Right. We're going to talk to Matthew Prince about how he made that decision and what it means going forward for Cloudflare and the internet at large. Sarah Fryer of Bloomberg Tech, thanks so much. We are continuing this conversation, as I said, with Matthew Prince coming up later in the show, why he decided to cancel the account of the neo-Nazi site, the Daily Stormer, later this hour. Well, Cisco CEO Chuck Robbins spoke out Thursday about the current relationship between President Trump and business leaders. This after multiple CEOs left the president's advisory councils when he failed to sufficiently condemn white supremacy. Robbins spoke to Bloomberg Daybreak Americas about the responsibilities of executives in the current political climate.
It's incumbent upon the business leaders here to continue to work on making sure that the things that this country needs to be successful over the next few years, that we're still making sure that we're playing a role in making that happen.
Chuck Robbins there, CEO of Cisco. Coming up, China's largest online marketplace boosted its dominance in e-commerce and mobile while pushing a new strategy for its offline business. We'll break down Alibaba's results next. This is Bloomberg. U.S. stocks sold off today. The Dow and S&P 500 both posting their worst day since mid-May, while the Nasdaq lost nearly 2%. Tech weighed on the major averages. Apple, Microsoft, and Amazon were all laggards for the S&P 500. Investors concerned over the terror incident in Barcelona and the controversies surrounding the Trump administration. One stock that did post gains despite the sell-off was Alibaba. It hit a record high after posting quarterly sales and earnings that topped analyst estimates. Revenue jumped 56% and profit nearly doubled in the June quarter, fueled by a core e-commerce business. Joining us now to discuss these impressive numbers, Hans Tung, managing partner at GGV Capital, and in New York, Bloomberg's Selena Wang, who covers Alibaba. So Hans, I'll start with you. When it comes to revenue growth, are you impressed that even a company of this size can continue to post such strong numbers?
Sure, of course we'll be impressed. Anyone can grow at this size. But at the same time, we also feel very vindicated because for the last 2 years, we have been saying that Alibaba was going to be great. And a lot of people had a skepticism with given the China downturn economy, stock market crash from 2 summers ago. And yet Alibaba continued to just grow and grow and grow. It has been impressive to see them do that.
Now, I want to take a look at how revenue growth has progressed. Take a look at your Bloomberg G #BTV 4742 shows how revenue has grown over the last several quarters. Selena, the company executives spent a lot of time on the call talking about a new retail strategy, another area they're expecting significant growth. What does that really mean?
Alibaba, like Amazon and many other e-commerce giants, have been talking about how really the future of commerce is when you combine offline shopping with online shopping. So Alibaba wants to leverage the millions of consumers it has, as well as all their data, to deliver a mobile app that offers a seamless experience when you're actually in a brick and mortar store. Now, a lot of Alibaba's recent acquisitions have been billions of dollars poured into this offline commerce. And for the first time, we heard a lot of talk about this HEMA concept, something that Alibaba's kind of been quietly incubating for the past 2 years, and they've rolled out more than 10 stores around China. And basically, you take the app, you download the HEMA app, walk into the store, scan the goods with the barcode, you check out with Alipay, and you can pick out your own seafood there, have it cooked on the spot to eat in the store, or have it delivered to your home in 30 minutes. And Jack Ma and his executives are really betting on this type of strategy to drive growth in the future.
Hans, How do you compare what Alibaba is doing here with these Hema supermarket stores, which actually double as warehouses for Alibaba's online orders? How do you compare what they're doing to Amazon?
Well, right now in China, e-commerce as percentage of retail, offline retail, is roughly 15%. And that penetration rate is going by 1% year on year. And for Alibaba to continue to grow at over 50% a year, they need to figure out a way to tap the other 85% of spending that's in the offline business. And that they're doing it through Hema, which is a very interesting way of combining online with offline. I think part of that inspiration for Hema comes from looking at what has happened in Japan retail in the last 20 years. For most Westerners who haven't been to Tokyo, you go to Tokyo, you go to Osaka, you see these high-speed rail, you see the subway stations, and you see tons of stores inside there. You land in Tokyo, you can check in your luggage. At airport, you'll get sent to your hotel. And China has learned from that and apply that to e-commerce.
I find it interesting that Alibaba is taking on grocery, though, at the same time that Amazon is here in the United States.
And Amazon did it after Alibaba moved.
Right. But how do their efforts compare?
If you look at it, the sort of size of the mobile payment market in China, in 2016, it's about $790 billion. That's 11x the size of U.S. mobile payment market. What it means is that the Chinese consumers are very used to paying with their smartphone, and they will use Alipay, they will use WeChat Pay to make payments everywhere they go. So they can go to a store, they see something they like, they can make a purchase. If the inventory is not available, no problem. The warehouse can send that to their home in the next 30 minutes. That kind of delivery and service level is something that we don't see in the U.S., and you'll see that happen more and more in China going forward.
Now, Selena, cloud revenue, another big growing part of Alibaba's business, but also they're losing money there. Talk to us about what's happening when it comes to cloud computing.
So they reached a milestone there. They had more than 1 million paying customers, but we did see growth slow down from that triple-digit growth rate that a lot of analysts had been predicting. Digital media entertainment, we also saw growth slow from triple-digit growth to just 30%, which is still good, but in comparison to previous quarters, it's considerably less. And a lot of the reason for the growing costs in those areas is because with the cloud area, they need to spend on data centers, and with the entertainment division, they're spending very heavily on content. And there's a big war being waged between Baidu, Tencent, and Alibaba. They're all bidding higher and higher prices for content, so it's likely that those losses are going to continue to widen before they get any better.
Hans, shares have been on a tear. Is it warranted? Is it going to continue?
I think that there's a chance that e-commerce as a percentage of retail in China will move from 15% to 30% over the next 20 years. So as such, that would be a good foundation area for growth for Alibaba.
All right, we'll have to check in with you in 2 decades. Hans Tung, as always, GGV Capital, thank you. Selena Wang, who covers Alibaba for us, thank you as well. Coming up, we bring you a company with big plans to take digital currencies to the stars. How they plan to do it? Next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Facebook has proven to be popular among hedge funds, so much so that 52 of the funds have more than 5% of their disclosed equity investments in the stock. Those funds represent 2% of Facebook's outstanding shares. Hedge funds, as a group, own 4.3%, according to data in 13F filings compiled by Bloomberg. Facebook's peers have an average of 5 hedge funds that own more than 5%. Well, Bitcoin showing no signs of slowing down. The digital currency climbed above $4,400 and hit a high on Thursday. The rise coming despite the recent Bitcoin split, resulting in the emergence of Bitcoin Cash. We're now going to send it across the pond to Bloomberg's Caroline Hyde in London, who's joined by the head of a company with plans to take the digital currency to new heights. Caroline?
Emily, yeah, great to see you. And new heights in every sense of the word. I'm here with Blockstream CEO Adam Back. Now, Blockstream is a Bitcoin infrastructure company based in San Francisco. The company recently launched Blockstream Satellite. The move allows them to offer a free satellite service to allow access to the Bitcoin network even without an internet connection. The company also touts the service as an additional layer of reliability for Bitcoin's blockchain data in the event of a network disruption. Adam, wonderful that we could catch you while you're all passing through London. And first of all, let's tackle the emerging market element of all of this, because this is often cited as a utopia of Bitcoin, really. It's the democratization of finance. How can people in countries as far-flung as Africa be able to access Bitcoin without internet through your help?
Right, so today to participate in the network, we take it for granted in the western parts of the world that we can spend $100 or less a month on fast DSL and that kind of thing. So that kind of stable infrastructure often doesn't exist in emerging markets. Yeah. And so cost of participation is quite high. So with the satellite service, we're able to bring the cost of Bitcoin network participation down to basically free. So the equipment that you need to receive is less than $100, and you can bring it down to maybe $20 by reusing normal satellite TV equipment.
And this is pretty important when we think that often Bitcoin is seen as a store of value. Really important when perhaps your foreign currency is not that. And I'm thinking of Nigeria, I'm thinking of Venezuela. Is this where you see a lot of the demand coming from?
Right, exactly. So there happens to be a coincidence of countries with weak infrastructure, or poor network services, maybe political instability, and also having weak currencies or currencies suffering hyperinflation.
So there's also a purpose that it can be used in the developed world as well, because sometimes internet connections aren't always that great.
Right, so actually, I mean, it's not that unheard of for internet connections to whole countries to go down for periods of hours when, say, a fishing boat digs through a transatlantic cable or something like that by accident. And so for Bitcoin, it's actually very important for security to have a view of the global ledger. And so one way in which you can do that is to have redundant connectivity. So satellite is a completely independent form of connectivity. And actually, with the set of satellites we have, so today we have 3 satellites and 4 coverage zones, but the additional satellites are going on by the end of the year to cover also the full globe. Today it's 2/3 of the world's surface. By end of year, full coverage. And with that structure, we actually end up with a ring of satellites where each satellite is able, in a failover sense, to retransmit data from the previous one.
You're doing this out of the goodness of your heart? I mean, how do you monetize this?
So actually, I mean, Blockstream is a blockchain infrastructure provider. So we provide technology to companies that service users. And so by bootstrapping this, we can help grow the ecosystem. And then the companies that provide services directly to users will buy more technology from us.
It's interesting that you're just supporting Bitcoin here. Is Ethereum not up to it? I mean, is really your view that the winner here is going to be Bitcoin as the digital asset of choice?
Yeah, I mean, I think Bitcoin has the best security track record, and when people think about money and digital gold and things like that, they're really looking for stable, predictable, conservative kind of things. So I think it's fine that people are experimenting with new technologies and so on, but dependability is key, and Bitcoin is always focused on that element. And at Blockstream, we also do enterprise blockchains, and we also, because of dependability and security record, we build on the Bitcoin protocol and extend that for smart contracts with high security characteristics and other assets such as shares and bonds and so on.
So you've almost made Bitcoin more flexible in the ways in which it can be used. Talk to us about the dependability of Bitcoin, though, at the moment. We've seen a volatile year, dare we say. I mean, suddenly a spike in the price because, thank goodness, the underlying technology has been upgraded and everyone seems to be following along with it. Bitcoin Cash can sort of go to one side, but there is an upgrade under debate. Does that mean Bitcoin will forever be dependable?
I think that Bitcoin is a bearer technology. So ultimately, it's the users and the market that defines what Bitcoin is. And so, the miners are a very important part of the infrastructure. They provide security to the network. But ultimately, they provide a service to the market. So it's the market that decides. And as a user, you hold your own coins. So, particularly if you run a full node, which is partly what the Blockstream satellite is about. To
run a full node.
So if you want to participate directly in the Bitcoin network, you should run a node that listens to the transactions that pass around in it. If you use a simplified client to the network, you're actually relying on a third party to some extent. So by using your own full node software, which most Bitcoin companies do, many investors do, you have a very direct bearer ownership of your assets, and you're not actually relying on anybody else at all. So in that circumstance, it's not really possible for somebody to make a change to your ownership or force a non-opt-in upgrade on you. You have to opt in if there's an upgrade.
So hopefully the majority will agree with any underlying technology upgrades going forward. Adam, great to have you while you've been passing through London. Adam Back is the CEO of Blockstream. Emily, to you in San Francisco.
All right, Caroline Hyde in London, thanks so much. Coming up, standing up for principles or censorship. Cloudflare CEO Matthew Prince joins us on Cutting Ties with the neo-Nazi site The Daily Stormer next. And a feature I want to tell you about, our interactive TV function. Check it out at TV Go on the Bloomberg. You can watch us live. You can check out our old interviews, send our producers a message, play along with the charts that we bring you on air. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with a check of First Word News. The Associated Press cites a senior police official who says neither of the two suspects detained in today's deadly van attack in Barcelona is the driver. 13 people were killed and 100 others injured when a van jumped the curb and mowed down pedestrians in Barcelona's historic Las Ramblas district in what officials are calling an act of terror. The death toll is expected to rise. Islamic State has claimed responsibility. Police say troopers also killed a man inside a car that hit two officers at a traffic blockade. Some harsh criticism today of President Trump from Tennessee Republican Senator Bob Corker.
I do think there need to be some radical changes. Has not yet been able to demonstrate the stability nor some of the competence that he needs to demonstrate in order to be successful.
Senator Corker's remarks come 2 days after the president declared white supremacists don't bear all the blame for last weekend's deadly violence in Charlottesville, Virginia. Senator John McCain today voiced support for fellow Arizona Republican Senator Jeff Flake. That's after President Trump called him, quote, toxic and weak on borders. McCain called Flake a principled legislator. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 7:30 Friday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, no surprises really that futures in the Asia-Pacific are looking weaker today. We've got Nikkei futures down, futures on the ASX lower by about 1%, all weighed down by the political scene in the US. Some rather mixed earnings, and then, of course, topping it all off, the tragic incident in Barcelona. It's going to be a quieter day for earnings here in Australia before things ramp up again next week. Miners might be a bright spot after we saw the iron ore price push higher, 3.3% to almost $73 per tonne now. Elsewhere, Ping An Insurance will be in focus when Hong Kong begins trading. First half net income 43.4 billion yuan. That's about $6.5 billion US. A new business for Ping An Insurance surging on an expanded sales force, and the dividend surging as well, up 150% to 5 Jiao shares, up 53% year to date. So that'll be one to watch today. Other earnings out today from the region: China Merchants Bank and China Resources Gas Group. Elsewhere, those open hearings continue in Japan into whether or not to allow casinos, and we'll have GDP figures from Taiwan and Malaysia as well. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Returning now to our top story. Tech companies from Facebook to Airbnb are going on the offensive against white supremacists and Nazis. The rebuke comes in the wake of the violent rally in Charlottesville, Virginia that left one woman, Heather Heyer, dead. Now, Cloudflare has added its name to the growing list of companies cracking down on hate groups. The web security company decided to end its business with the Daily Stormer, a known neo-Nazi website, after both GoDaddy and Google severed ties. It was an unexpected move, as Cloudflare has prided itself on its unwavering commitment to free speech, even as it's been criticized for providing services to alleged terror groups. Joining us now to discuss, Cloudflare co-founder and CEO Matthew Prince. You have said in the past, a website is speech, it is not a bomb.
Yeah.
What's different this time?
Well, I think that the Daily Stormer was a really unique incident, and to us, it was the exception that proved that we really needed to rethink a lot of the rules, not just with Cloudflare, but with the tech industry in general. In this case, the Daily Stormer really came on our watch list, our attention list, and really got put on probation a few months ago when we started to get reports that they were actually harassing people that were submitting abuse reports through our platform. And then earlier this week, they were bragging on their bulletin boards that the people of Cloudflare, the senior management of Cloudflare, were actually supporters of theirs. In reality, we think that the content that was on the site is abhorrent and vile. And that was really the final straw for us. But I think there's a really important piece here where we need to think about who it is as a technology company or the society in general that can regulate what content is online. I sit in a very privileged position running a company that sees about 10% of all internet requests, and I could make a decision that they shouldn't be online anymore. And I'm not sure that I'm the right person to be making that decision.
Now, to be clear, I think we should take a moment to talk about what Cloudflare does, because just because you pulled the plug doesn't take the site down, but it makes it more vulnerable to attack, right?
That's right. And so Cloudflare provides a number of services. We make sites faster, we help them stay online, we stop big cyber attacks launched against them, and again, see a huge portion of the internet. Most of our big customers are big Fortune 500 companies and otherwise, but we have small customers like the Daily Stormer that get attacked all the time. The reality of the internet today is that it's become such a dangerous place that if you don't have a major network like Cloudflare sitting in front of your infrastructure and you do anything which is controversial online, chances are that hackers are going to be able to knock you off.
Now, the reality of the internet is also that the Daily Stormer isn't the only Nazi website online. There are other hate groups online, and are those groups still up and running thanks to Cloudflare's services in part?
So we still believe that the right policy is to be a content neutral network.
So this is not a precedent, what has happened with the Daily Stormer. This is a one-time thing.
That's correct. I think that this is, we hope, a way for us to say, let's stop and think about what's the right place for internet content to be regulated. You think about a company like Google. So Google terminated the Daily Stormer from using their registrar service, but they didn't kick them off their ISP. They didn't push an update to Chrome that didn't let you access it. They didn't stop answering their DNS queries across their DNS service, and they didn't pull the search results from that site. What that tells me is not that Google made a mistake in that, but that where in the internet stack something is being restricted or controlled matters. And so the rules for someone like Facebook or Twitter or YouTube are inherently going to be different than a company that runs a network like Cloudflare or Level 3. And I think we need to have that conversation about where is the right place for content to be regulated and who's going to make those decisions and how are they going to make those decisions.
Cloudflare has been called terrorists' little helper, a company that helps serve up hate on the web. Even if the rules are different for you than it is for these content providers, how do you respond to those accusations? Well,
the nature of being neutral is that there's going to be someone who you upset all the time. We have a project called Project Galileo.
But terrorism is different than, upsetting someone else for a variety of other reasons.
And so when we hear that there's an allegation that there's something that's terrorist content, illegal content, or otherwise, we turn to the experts in terrorism and illegal content, which is law enforcement, legislators, regulators, and we say, here is this content, what would you like us to do? That to me feels like the principle of due process, that they are actually politically enshrined organizations who can make these decisions, as opposed to these decisions being made based on what the political whims of me or Mark Zuckerberg Bloomberg or Jeff Bezos are.
So are you saying you think the internet and these internet companies should be regulated like utilities?
I don't think that that's the answer necessarily, but what I do think is that we need to have a conversation between all of the different stakeholders, and that means the technology companies, that means regulators, that means content creators, that means content consumers, that means civil society organizations, because at this point it's the Wild West where people are making these decisions and those decisions aren't actually transparent. This has been framed a lot as a freedom of speech issue, and I'm the son of a journalist. I think freedom of speech is absolutely critical, but I think it's important to acknowledge that it's a uniquely American concept and uniquely American idea. On the other hand, due process is something that spans the globe and people really, really, really believe in. And part of due process requires that there is transparency, that there's accountability, that you can understand what's going on. And I don't think that that's necessarily what's going on with technology companies right now.
You've warned this is dangerous territory, this is a slippery slope. What is the worst case scenario?
Well, again, I think the worst case scenario is that you have a cabal of 5 to 10 tech executives who basically are choosing what content can and cannot be on the internet based on either what their own political and personal agendas are, or even in worst case, what their economic incentives and agendas are. That, again, I think is something that even as someone who sits in that privileged position, I'm worried about as an internet consumer. And I think it's important, again, that there's an understanding and accountability for when technology companies are making these decisions.
Look, these people, Nazis, would find each other if the internet didn't exist,
That's
right? But, you know, some people have argued that technology has given these groups oxygen, has allowed them to find each other more easily, has allowed them to grow. You know, given that these tech companies are now so powerful, including your company, which handles 10% of all internet requests, do you think that by taking a moral stand, even if it is a stand that these companies haven't taken before, they can actually make a dent in the fight on terror? Like, can tech companies make a difference with their policies? And if so, does it make that moral choice worth it?
So I am skeptical that censoring content makes content go away. On the other hand, I do think that taking content and saying this is something that we support and we believe in and we'll help promote that is really important. So what we're—
But isn't that like the opposite? Like sort of, it's a double-edged sword, right? Promoting things you like versus, you know, condemning things you hate.
Again, I think that if people learn to hate, and so if we can teach them how that isn't a productive and part of a modern civil society, then that makes a ton of sense. So what we do at Cloudflare is we actually work with over 100 civil society organizations to identify either politically or artistically important groups that might be under attack. And they may not be under attack from hackers, but they could be from governments, for example, LGBT groups in the Middle East, human rights workers in China, where they might be trying to be silenced. And we say we'll lend our services in order to make sure that they stay online. I think that that's the role that technology companies can really play, is in saying, here is a way, here's an alternative way of looking at the world, which again is more progressive and aligns with the moral values of those companies.
Are you still, in this moment, uncomfortable with the decision that you made about the Daily Stormer?
Absolutely. I think, again, you know, I woke up one morning and got sick of these jerks using our platform, and I flipped a switch and they were no longer on the internet. And I'm not sure that that's a power that any individual, especially any individual that isn't politically, sort of has a political legitimacy to them, that any individual should be making.
All right, Matthew Prince, CEO of Cloudflare. Thanks so much
Emily.
for stopping by. Coming up, one of the UK's top peer-to-peer lenders is looking to branch out from its roots. That's next. This is Bloomberg. Walmart gave a lukewarm forecast for the third quarter as the world's largest retailer has been spending heavily to catch up with Amazon. CEO Doug McMillon has channeled more than a third of the company's capital spending budget into digital initiatives like a specialized e-commerce distribution center, and those investments appear to be paying off. Walmart reported online sales jumped more than 60% in the second quarter. In the last quarter, online sales soared, though, 60%. A vote of confidence for one of the international players in the business of peer-to-peer lending. UK-founded Funding Circle is getting $206 million from Dutch insurer Aegon. That money will be channeled through the Funding Circle platform as loans that could reach more than 2,500 small and medium-sized businesses in the UK. The deal shows how institutions like insurers are increasingly attracted to the yields on offer, growing Funding Circle's peer-to-peer lending roots. Funding Circle CEO Samir Desai spoke with our Caroline Hyde in London, where she asked if more financial institutions will be using the services of companies like Funding Circle.
If you look at the Funding Circle platform, we have 70,000 retail investors that lend through us. We have government institutions, so the British Business Bank, KfW, the European Investment Bank, lots of local governments and local councils. And we also have a number of other institutions. So we have our own listed fund, the Funding Circle Income Fund, which is a number of blue chip shareholders. So from our perspective, we just want as many different types of investors as possible to be using the platform to get money directly to small businesses. And I think as every year or every loan that we do goes on, the track record becomes more and more established, and I think more and more large institutions will want to get access to this.
So the supply is coming thick and fast. What about the demand side of the equation? How are you seeing small businesses still wanting to come and borrow from Funding Circle rather than going to the banks?
So, I mean, on the small business side, we've had incredible amounts of demand. So we think we're about 2% market share of gross lending in the UK. But actually, if you look at net lending, which is the lending less repayment, so a measure of new money going into the economy, we actually think we're about a third of the market. So around a third of new money going into small businesses actually coming via the Funding Circle platform. Wow. So I think it's increasingly being proven as a really good way of getting money to small business. And the reason is it's faster. Businesses typically get decisions within 24 hours, funds within a few days. We deliver much better levels of service. Actually, 94% of businesses tell us they would always come back to us first versus go to the bank. And often we're actually cheaper as well because we're able to use vast amounts of data to assess the process. So,
are the banks sitting up and paying attention? Are they starting to try and make their processes more efficient, try and use technology to ensure that they can do the credit risk that much faster? Or is this a land grab that you're able to leave up to yourself?
I think banks will always get better and improve, and we have partnerships with banks, certain banks, to help them fund customers that couldn't go through their platform. So, the vast majority of customers are ones where both we or the bank would fund, but there are pockets where we can help banks as well. But I think it's a very big market. We're a very small share at the moment, and even if we went to 20–30% of the market, I'm not sure how much notice banks would still take it at that point, to be honest.
It's interesting. Bloomberg had a story out showing how much money going into fintech startups at the moment is coming from banks and institutions rather than venture capital. Are banks trying to put money to work? Are banks trying to get on the side of this digital movement, or do you think that they are still head in the sand?
No, I think they are, and I think if you look at the more forward-thinking institutions like Aegon, for instance, which has started purchasing our loans, others I'm sure will start soon as well. You can see that there is a big move to say actually there is this part of the market where consumers or small businesses, they just want choice. They just want things that actually aren't banks actually, and I think you either decide you want to get involved and play in that area and work with players like ourselves, or you seed that part of the market. So in the same way as online retail and other things, like choice is coming to the market, and I think it's something that customers want. And you think that banks and institutions will always go through yourself rather than building their own? I think some people will try to build their own. That's natural. But I think for most, it's a very simple, easy thing to partner with someone like us. I mean, we're a small business loan specialist. That's all we do. That's all we've ever done. That's one part, though, of the bank's business. They'll be doing corporate loans, credit cards, mortgages, personal loans, all sorts of different things. So, actually, by partnering with specialists, it's a very cost-effective way of them actually accessing the market and still getting access to a lot of the yield. And lastly, you have such a bird's eye perspective of what's happening, well, whether it be the US economy, Netherlands, Germany, and indeed the UK.
From a Brexit perspective, how are we in terms of the UK? Are you still feeling that demand is there, that small businesses are growing, that your company can continue to thrive within the United Kingdom? Because we do still have so much headline risk that hits us day to day.
Yeah, I mean, if you look at our business, we've grown 80% year on year since the referendum. So we still continue to see strong demand from small businesses. We haven't seen an increase in solvency rates or bad debt rates on our platform. If anything, the fact that big insurance groups like Aegon have looked at all that data and decided actually we do want to purchase loans is probably a good validation of the strength of the UK economy. I think there's still a way to go till Article 50 is actually triggered, and we'll have to be vigilant. But so far, both in the UK, but also broadly across the US, Germany, Netherlands, we're seeing economies actually in very good shape, and small businesses looking to grow and expand still.
Funding Circle CEO there, Samir Desai, with our very own Caroline Hyde. Coming up, a total eclipse of the sun. We will tell you how tech companies from Airbnb to Google are gearing up for Monday's solar eclipse event, including passing out 14,000 pairs of these. This is Bloomberg. Well, for those of you who won't be able to get out and go see next week's historic total solar eclipse for yourselves, Twitter and the Weather Channel got you covered. The two are teaming up to stream the event that starts at 12 Eastern Time on Monday. The stream will take place on Twitter as the eclipse begins over Oregon and makes its way across the country to South Carolina. Meantime, for those wanting to see the event in real life, a narrow trajectory from Salem, Oregon to Charleston, South Carolina will have the best view of the event, and homeowners on the route are finding a way to cash in on this once-in-a-century moment. Joining us for more, our Bloomberg tech reporter, Olivia Zaleski. So there are some really small towns on the route of this eclipse, and some of those people in those towns are going to be making money, aren't they?
Small is an understatement here. These are teeny tiny little towns. We're talking about a population less than 4,000 people. These towns maybe had, one of them, Rigby, Idaho, had one person stay in an Airbnb this weekend last year. Now 700 people are going to stay in an Airbnb this coming weekend for the eclipse. About 50,000 people are expected to stay in Airbnbs on this very narrow path that's about 70 miles wide that stretches coast to coast.
So is Airbnb doing anything in particular to host a growing number of people?
It did a sweepstakes, and it sort of got the message out there on its website. But I think a lot of people sort of felt like, there aren't a lot of lodging opportunities in these tiny towns. Rigby, Idaho, for example, has one hotel. It's a Motel 6. It's charging $330 a night, and they said, hey, I can, rent a room in my house. Some people are even renting out their backyards. Patches of grass are actually going for about an average of $150 in Rigby.
Wow.
It's pretty, or as high as 150. I think the average is closer to 120. Yeah, you can park your car there and pitch a tent.
Now, Hertz is also bringing in extra cars. They had gotten some backlash for canceling some overbooked reservations. Google, I know they sent you a pair of these as well. Glasses, I guess they're partnering with Mystery Science and giving these to students.
Yeah, they're giving them out to students that are also along this path. Lots of excitement around the eclipse.
All right. Well, it's coming up on Monday. We'll have full coverage of the total. San Francisco isn't the best place to see it, but you still can enjoy.
I'll be watching.
Olivia Zaleski, our Bloomberg tech reporter, thanks so much for stopping by. And that does it for this edition of Bloomberg Technology. Coming up, Essential President Niccolo de Masi will be here Friday to discuss the official launch of Andy Rubin's new phone. That is all for now. This is Bloomberg.
walk that line when you're in the middle of a crisis situation.
It's really all about enabling people. Technology needs to serve everyone. But at the end of the day, it's all about emotional decision.
I think there's huge innovation left in music.
The hallmark of a truly great leader is that great is never great enough.
For us, it's not about being first, it's about being the best.